How subprime lenders really approve you. I'm here with Patrick Brenner from the Southwest Public Policy Institute. Patrick, good to see you.
Likewise, Philip. Thanks for having me on. It's a pleasure to be here.
Patrick, you're a think tank. You deal with current issues. You move policy. What are you seeing?
Well, before we get into that, I want to talk a little bit about like the role of a think tank with respect to how we change policy or change public opinion on policy.
Sure.
And a lot of it is the core focus of our work is identifying what is called the Overton window. Now, the Overton window was developed by a fellow named Joseph Overton at the Mackinac Center for Public Policy,
Hmm.
and he identified that it was the window of discourse, or rather, it's the range of subjects and arguments that are deemed politically acceptable to the mainstream population at a given time. Now,
Okay.
my job within the think tank environment is to identify where that window of discourse or where that Overton window exists, and then either develop or help develop policy within that window of discourse or move the window of discourse within the mainstream population
Okay.
over time.
Great.
But great question to kick things off. Why does let's just talk about why subprime lending even exists.
Sure. Sure.
Um, in this realm, we have to identify that there are millions of Americans out there who have damaged or thin file or no file or unconventional credit histories, but they still need access to credit.
Yeah.
Now, at the Southwest Public Policy Institute, we believe that credit and access to it is a human right. We very much believe in financial inclusivity. And we've identified that part of the problem within the policy environment is that traditional banks have a tendency to reject subprime and deep subprime borrowers outright.
Hmm.
And subprime lenders fill a very necessary market gap that would otherwise push people into a cash only, or I guess you could call it like fringe finance economy,
Yeah.
or into situations where they're borrowing money from unscrupulous lenders. And what I mean by that
Payday
is
lenders or
there's
no.
I'm more referring to unlicensed
Oh,
lending.
got it. Okay. Uh-huh.
So
Okay.
everybody's heard of the term loan sharking and the
Oh yeah.
mafia and all that. And
Yeah.
we do not want American consumers to have to be borrowing money from those types of
Yeah.
lenders.
Yeah.
So
Oh,
within this realm, we've done a lot of research. We've published some really key core studies in the consumer emulation space. One was No Loan for You and No Loan for You Too, and those two studies identified how interest rate caps and price controls on credit are actually negatively impacting American borrowers in states where price controls go into effect.
hmm.
And then there's also a new study that we released earlier this year called Swipe Right,
Hmm.
which identified how American consumers are actually finding access to different credit lines, whether
Okay.
it's subprime credit cards or other alternative loan products. And
Okay.
that Swipe Right study really identified who some of the key players are in the lead generation field
Hmm.
or the marketing engine
Yeah.
field.
Yeah.
We specifically looked at Lending Tree, we looked
Hmm.
at Credit Karma, and we looked
Hmm.
at NerdWallet
Hmm.
and how they facilitate access to credit for mainstream subprime borrowers.
Got it. And in reviewing the Lending Tree, the Credit Karma, and the Nerd Wallet, offerings to subprime borrowers, were you able to decipher how they actually approve these clients?
We were
Oh, great.
from an outsider's perspective, and I think that the biggest myth that exists in this space is that it's all about your FICO score,
Yeah.
and that is not true.
Okay.
Let's
Thank
talk
you.
about
That's the insider
FICO.
information we want to hear. It's
Yeah, yeah,
not
yeah.
about your FICO score.
It is not about your FICO score, whether it's FICO or Vantage or whatever
Hmm.
those mainstream credit scoring models. uh, we have to really break down exactly what all of these different factors are. Let's talk about the credit bureaus. The credit bureaus are not actually the ones scoring borrowers.
Hmm.
Credit bureaus are only facilitating access to credit data. That's the data that has been collected within the credit bureaus from borrower behavior.
Hmm.
And this is specifically borrower behavior with respect to actual credit products that are facilitating reporting. Now, not all subprime and deep subprime credit options are actually reporting payment history and credit data back to the credit bureau. So that's part of the problem with subprime and deep subprime is payday loans, buy now, pay later loans. That kind of activity is generally not reported to the mainstream bureaus. So you get these the subprime bureaus. And I don't think anybody in your audience has probably heard of DataX, but DataX is one of those subprime bureaus that is now associated with Equifax.
Mm.
But breaking down FICO, FICO is the scoring model that is provided by the Fair Isaac Corporation, and FICO is that scoring model that gets fed in data from the credit bureaus to provide a specific score to a borrower. And
Hmm.
there's all sorts of different categorizations. There's deep subprime, there's subprime, there's near prime, there's super prime,
Hmm.
and I mean, banks traditionally don't like either deep subprime. They also don't really like super prime because they can't make money on the super prime borrowers.
Hmm.
But FICO, there's a bunch of different models that are available. Vantage, the same thing. There's a
Right.
bunch of different scoring models available within these different ecosystems for credit scores.
Hmm.
But FICO, on its face, is a backward-looking measure. It
Hmm.
only reflects past mistakes. It does not reflect current stability.
Absolutely.
And subprime issuers have a really unique position in that they do not rely solely on credit scores to approve applicants.
Hmm.
And well, let's talk about why. Because bureau files do not reflect recent income stability,
Right.
they do not reflect bill pay momentum, they do not reflect cash flow changes or improvements over time, and they certainly do not reflect non traditional repayment history or payment history,
Right.
rather. And that's talking about utilities, rent, subscriptions.
So,
That's
so
not
how,
traditionally included in credit bureau reporting.
so how do they approve you? How are these subprime lenders approving the borrower?
What a good looking question. They use enriched and alternative data. And I
Okay.
think that what we can do is take a look at one specific example that I'd like to point out, which is the
Great.
Equifax one score blend.
Okay.
So
Great.
Equifax has developed this new one score model, and that blends traditional bureau data with verified telecom and utility payment history. It incorporates subscription payment history. It incorporates bank account cash flow patterns, and it
Mm.
incorporates also employment stability.
Okay.
And that's not something that's traditionally accounted for in mainstream bureau activity. So Equifax developed this one score model that allows a lender to incorporate enriched data. We're going to call it enriched data for the purposes of this
Sure.
conversation. And this is an opportunity where the credit bureau is providing forward-looking or a behavioral risk picture. It
Now,
is very forward-looking and very
now,
empowering for. Oh, sorry, go ahead.
can a borrower pull their one score data, or is that only from a like someone buying it from Equifax?
That is lender side only, so
Okay,
far
lender
as
side
I'm
only.
aware.
Okay.
I don't think that Equifax's one score is available for review by the general public.
But this is really key information, Patrick, and so great to have you as this insider giving us this info because frankly, so think about a borrower. A borrower just files bankruptcy and maybe they're renting a property, but maybe it's in their name and the husband's name has the utility. The husband names has fill in the blank, whatever it is, right? The wife applies. The wife may not garner the same value from the rental and the utility bill as the husband because she's not on all those calls. Am I understanding that right?
I think so.
Wow.
Yeah.
So you know what? Because in our program we talk a lot about having independent credit files from your spouses for various reasons I'm not going to go into now. But that changes the game a little bit when it comes to rental data, when it comes to utilities, when it comes to cable. That's really insightful. So this is done by Equifax on their own for subprime lenders saying, hey, we need forward-looking data as opposed to backward-facing data, right?
Right.
I'm
Right,
just
absolutely.
clarifying. I'm clarifying all this for my own self to understand this for for the person watching this. That's great info.
It's fascinating. There's
Yeah.
so much data out there, petabytes of data out there on every borrower in the country. And I think that what we forget in our field, I mean, Philip, I don't know if you've ever declared bankruptcy. I have never declared
Mhm.
bankruptcy, um, but there are individuals, borrowers in our American ecosystem and the economy that do not have access to mainstream credit products and
Yeah.
are classified and categorized by the FDIC as unbanked or underbanked. And it's actually
Mhm.
a really large percentage of the population.
Mhm.
In the Albuquerque metropolitan area, over 30% of residents are categorized as
Mhm.
unbanked or underbanked by the FDIC. 30%, over
30%
30%.
in Albuquerque.
Yes.
If you would have asked me what that number was, I would have guessed 5%, 3%.
No, it's
No way,
huge.
I guess 30, right?
It's huge.
Wow. Okay.
Now,
So,
unbanked or underbanked means that they just do not have access to traditional financial institution products, checking accounts, savings accounts, whatever. Now, this could be by choice or it could be because of financial circumstance.
yeah.
So, whether they have a really negative borrowing history and they can't qualify for a mainstream banking product,
Mhm.
or whether they choose to not acquire mainstream banking products because
Yeah.
of mistrust of financial institutions.
Right.
I can't really blame them for that.
Yeah.
Overdraft fees are a nuisance for
Yeah.
sure. But these unbanked and underbanked individuals, they're qualified as thin file or no
Yeah.
file by
Right.
the traditional credit bureaus,
Yeah.
the Tri Bureau. So, what do you do?
Yeah.
Like, there's no data available
Yeah.
for these borrowers. How do you get them approved for products
Right.
if their credit bureau data, their credit report, doesn't produce enough
Right.
material by which to score a borrower?
Well,
Well,
we're
you
gonna
have
have
to
to do
use that.
another better. We're gonna have to do another video on the thin files because
Yeah.
that's a whole nother rabbit hole, which is very interesting.
But
And
in the subprime and deep subprime space, they've got to be able to score these thin file, no file applicants.
right.
And
So,
that's when they
but
start incorporating enriched and alternative data.
yeah, so let's go back to that on how these subprime borrowers are getting approved. They're doing
Sure.
with what you're calling enriched data, forward facing, Equifax one that only the lender can pull, the client can't pull. But what we do know are a couple things. Your credit score is not impacted. We know that. They're not looking just at your credit score, right? They're not looking at all these collections or bankruptcies. Now, it may be an allocation or they're considering it, but it's not what really matters, right?
Part of it is what really matters, and they'll still use it for the purposes of risk modeling. I
Hmm.
mean, from a bar from a lender's perspective, we've got to look at this as risk analysis.
Hmm.
What is the possibility that this borrower does not repay their loan? And in the subprime, deep subprime credit space, default rates are much higher than in the mainstream credit space.
Hmm.
And these lenders have to accommodate for a greater default rate, greater charge-offs. Um, so
What? Right.
in that realm, they've got to look at the big picture and
Hmm.
not just solely focus on the mainstream credit data. They've got to look at the big picture by which to cast the biggest net so that they can get access to the greatest borrower pool to be able to approve as many potential borrowers as possible. Which is why they do look at mainstream credit data if it's available, but they also look at that enriched data, and then that approval is based on an analysis of all of that data
All of it. Yeah.
holistically: repayment trajectories, spending predictability, deposit cash flow stability, velocity of past delinquencies, and whether the borrower, just on a pure arithmetic perspective, whether the borrower can sustainably manage even a small line of credit. Now, this mirrors like judgmental credit analysis, which is historically used by community banks, but now it's enhanced by modernized data-centric risk analytics.
So let's talk about like the application. When a subprime borrower is filling out application and they put that they've been at this job 5 years,
Mhm.
how The way these approvals come back so fast, how is that verified? Like what is the income verified? Is the employment verified? Is the rental history verified? Like these are all forward facing. If someone filed bankruptcy, but they've been living in a property as a rental for 3 years, that's a good piece of data. How is
Sure.
all this data verified in real time with the subprime lender?
This is a really interesting question, and it is something that I can answer having directly applied for a Merrick Bank double your line credit card.
Okay.
This was in the fall of 2024, and I had applied for this Merrick credit card. It was seen as a subprime credit card. And what happened was, at the time of my application, I had actually frozen my credit was locked with the mainstream credit bureaus.
Right.
It was locked and frozen at Equifax, it was locked and frozen at TransUnion, and it was locked and frozen at Experian. Yet
Hmm.
I was still able to get approval for this
Hmm.
particular credit card.
Even though
How
your
was I
credit
able
score
to,
was locked, even though your credit
even though
score
my
was locked.
credit score was locked at the time of the application?
Hmm.
And in speaking with a colleague of mine who shall remain nameless, um, but in speaking with a colleague who was embedded at one of the credit bureaus, he was able to tell me that it's because they're taking snapshots. The credit bureaus are taking snapshots periodically of a borrower's activity, whether it's that alternative enriched data in the form of rental or utility payment history, or whether it's the mainstream data, like
So
the
that
traditional credit
does a
bureau data.
snapshot mean that even when someone is not applying, they're getting a snapshot? Because why would
Yes.
Merit be taking a snapshot of you?
Well,
Right?
whether it was Merrick directly or it was the credit bureaus that were taking
Oh, I see.
snapshots. They were
So
taking snapshots of my data, and then those credit bureaus were just reporting those snapshots back to Merrick. And then Merrick was using their internal analytics to determine whether or not I fell within their acceptable categorization
got
of
it.
risk.
Got it.
And I fell within their acceptable parameters and was offered conditional approval for their double your line credit card. And this is all documented in our swipe right study.
Great. Now, when you say conditional approval, when you get a conditional approval, does that mean you had to provide something afterwards?
That's a really good question, Philip, and I misspoke. It wasn't conditional approval. It was
Okay.
approval right off the bat. They
Okay.
extended the line within minutes.
Okay, that's fantastic. That's
Yeah.
fantastic. So it's really not, I mean, obviously they're not verifying your rental history. You're not verifying.
It was already verified in that snapshot that was provided by the credit bureaus,
Oh, I see. So that's how they're doing it. Do
right?
credit bureaus keep track of how long you've been renting a property?
It depends.
Wow, I didn't, I mean, like that's news to me.
There's petabytes of data on every American borrower that ever existed.
Yeah,
And all of that information, all of that data gets consolidated at the bureaus and is being utilized more and more frequently in our 21st century credit ecosystem. They're just, they're, these are big data warehouses. They've got data on everything, Philip. It's
yeah,
fascinating.
yeah, it really is. I've never, thinking about that. It's when you have someone who's applying for a subprime card or whatever, right? They're rebuilding their credit and they're looking at this and saying, "Am I going to get approved?" There shouldn't be that much thought put into it. Would you agree with that? Like apply and see what happens and then move on.
Sure.
If you're not, I mean, I get people that are so concerned about the subprime card. Am I going to get approved? And I'm like, it doesn't really matter. You're not going to have these cards for long. Apply, build credit roots, and then you're going to you're going to rebuild your credit score, and you're going to get different things as your credit model approves. You agree with that, Patrick?
I do. I do very much so. There is a risk to the borrower of applying for a credit product or a line of credit that is not approved, and those uh, reflect adverse action on the part of the potential lender in not extending credit.
Mhm.
but the potential benefits of being able to secure a line of credit far outweigh the risks of a potential declination.
And and what about bankruptcy? I have some people that I find it so interesting. They go through a bankruptcy and they apply. Certain banks approve instantly someone with a 540 credit score and a bankruptcy, but certain banks don't. And my response, it's not all or nothing. I mean, I can get a bank that approves after a bankruptcy, and then a borrower goes and doesn't get approved, and on the list of the declination it says file bankruptcy, and we know that it's not all people file bankruptcy. There's something nuanced to it. It's because of that enriched data.
Sure, absolutely.
Wow.
A
So
bankruptcy does not preclude you from being able to secure a line of credit, but there needs to be additional enriched and alternative data available that shows that you are a responsible borrower in other ways. And this is considered on an institution by institution basis, and that institution's appetite for risk is different. USAA's appetite for risk is far different than Credit One's appetite for risk. And Credit One's
yeah, for
appetite
sure.
for risk is different than Merrick Bank's appetite for risk.
So
And different borrowers are being presented to these banking institutions with a variety of different circumstances, and all of those different circumstances are compiled together into as cohesive of a picture and a holistic as a picture to the lending institution as possible. And then that lending institution makes a decision as to whether or not to extend that credit line to that borrower.
So Patrick, let me phrase this question to you. You're
Yeah,
you're 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 speaking all these borrowers that have
sure,
a poor credit score in this specific video, for example, right? They're
sure.
watching this video and they want to get approved for a credit card. Um, what would you advise them, knowing everything with all your think papers and everything you've done, all the research you've done? What would you advise someone who wants to get approved for a subprime credit card to do prior to applying?
That is a loaded question. Oh, golly.
Well, I
Um,
mean, give me three things. Give me like, I just find this enriched data very interesting, right? Like,
sure,
and that's something that I had heard about, but it wasn't on my radar screen as clearly as you just put it, right?
sure.
And
Look, look,
so
look, look, pay your rent on time, pay
for
your cell
sure.
phone bill on time, pay
Yeah.
your utility bills on time.
Well, and actually take it one step further. Make sure you're on your utility bill. And it's not just your
Yes,
husband, not just your wife. Like I got to tell you, my wife is set up when we moved into our home. She set up the electric. It's in her name, not even in
sure.
my name, right? I'm sure this happens all the time. People don't even think, well, it's not reported to the bureaus. Who cares? But actually, what you're saying is the enriched data does matter.
It does.
All of it
It
is
does.
amalgamated in these warehouses and they're taking snapshots. So that's the one thing. I mean, get on the bills that you have and forget about paying on time. Of course you got to pay on time. It's get on the bills that you're paying, right?
Right.
What
Get
what
on the
else?
bills that you're paying. Make sure
Yeah.
that you're named on the account.
What else would you
What
say?
else?
What else?
In the field of actually applying for credit in the aftermath of an adverse event such as a bankruptcy,
Mhm.
utilizing those lead generation services. I'm not going to specifically direct individuals to like Credit Karma or NerdWallet. But those types of lead generation services, those marketing engines that
Mhm.
are connectors and facilitators between potential borrowers and potential lenders, use those.
Yeah.
They
Well,
have filtration mechanisms that can help borrowers find access to certain financial products. In the case of the Swipe Right report, that study, the consumer emulation study that was published by the Southwest Public Policy Institute in 2025, that was a great example of we used the NerdWallet, Credit Karma, Lending Tree filtration mechanism to find specifically a credit rebuild credit card,
Yeah.
which is how we found the Merrick Bank Double Your Line product, as well as a number of other products that were made available.
Well,
I would not use a search engine. I would not go to
yeah.
Google directly and look for a credit rebuilding credit card because you'll have to apply to um,
Yeah.
each of those different credit extenders, those credit facilitators directly. Whereas if you're using one of those lead generation services
Yeah.
or the marketing engines like Credit Karma,
Well,
what
I,
they do is
yeah.
they'll connect you with somebody who is most likely to offer an extension of credit to you.
Patrick, I could speak into it very clearly at 720creditscore.com. We have a link. It's credit cards to rebuild, and it's populated on the back end by bank rate, right? All on focused on what credit cards are currently approving people to rebuild their credit, to fill in the blank. Secured cards, because with Chapter 13 bankruptcies, sometimes people need to get secured cards and not unsecured. And it's populated by those, well, as you call it, lead generators or facilitators for the cards that are currently working and improving the best. It's all right there. It really is helpful. I mean, so different than the way we had it 5 years ago or remember years ago. It's a big, big help. I appreciate you bringing that up.
Yeah, of course.
Yeah.
It's funny. You mentioned Bankrate. I didn't even think about using Bankrate as one of those facilitators during our study that we had published. But they at this point they've reviewed some of our material and were cited on Bankrate as a notable reviewer of credit product.
There you
But
go.
Bankrate is another such example of one of those marketing engines that potential borrowers can utilize of finding the right credit product for them in whatever circumstance they're in, whether
It
it's
makes
rebuilding credit, whether they need a secured or an unsecured credit line. Yeah,
it makes it so much easier.
absolutely.
Patrick Brenner, the Southwest Public Policy Institute. Patrick, thanks for your time.
Thank you, Philip. That was a pleasure.